Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at a very popular, very well-known indicator. The name is Stochastic Momentum Index, and this is a more refined version of the stochastic oscillator. We have more stabilization, less noise with using this indicator compared to what we get in terms of the signals generated by the stochastic oscillator. So let us now head to the JForex 4 platform, the newly released trading platform from the Dukascopy Bank SA. Here I have already added the stochastic momentum index, and the chart is of 5 minute time frame. I will change it to hourly so that our setup becomes standardized. 5 minute is too low for demonstration purposes, so I will change it. Here on the lower side I have this stochastic momentum index in place with the default parameters. The input parameters are as per the default 2585, and I will shortly explaining to you what these 2585 are. Now let me first change it to hourly. The indicator's concept is fairly simple. It is derived using the average high and low price and the current price in terms of that high and low price range. If we have the current value closer to the extremes of the prior defined range, then we will have the output of this oscillator closer to the low. On the lower side, the output below minus 30 is considered oversold, and when we have the output above 70 on the higher side, it is considered overbought. So I will try to explain to you its concept and then its possible uses, the customization options provided on the platform. The indicator is fairly simple to understand and equally easy to use. And if you are familiar with the stochastic oscillator, you might be aware that it is drawn simply using the SMA and the current pricing data. So same concept applies here. If you want the exact formula, I won't be able to give you the exact formula here. For that, you can simply do a search on the internet and you will get the exact formula. But as I said, the concept is simple. It is simply comparing the current price in terms of its historical range and looking at the momentum in near term, just prior to the execution of the trade. We always consider what has been the recent pricing data suggesting, and that's what is given more importance in this SMI indicator also. So now let us see what SMI indicator can what kind of opportunities the SMI indicator can provide us. Coming to its input parameters, let us see some of its editing options provided to us on the platform. It is taking some time to respond. I think the problem is with the computer, not with the JForex platform. Let us wait for a few more seconds. And here we have these input parameters: the fast K period, slow K period, slow D period, and the smoothing period. And here from these input parameters, you can notice that more weightage is given to the recent pricing data, and that is the benefit of working with the stochastic indicators. Even in case of the stochastic oscillator, we mostly rely on immediate pricing data for making trading decisions. So this is a kind of a leading indicator. It generally has a very little lag in terms of the price action and the signal generated by the indicator, and that is one beauty of the stochastic indicator. But with that comes the possibility of stochastic momentum index generating too many signals in noisy market scenario. By noisy I means when there is a narrow range and the moves are simply happening within a narrow range. In those kind of environment, the multiple signals generated are not likely to generate any significant profit. Instead, we might end up losing money. So those kind of scenarios has to be kept in mind whenever we are using these indicator, the stochastic momentum indicator. Now here we have to define these fast K, slow K, slow D and the smoothing period, and these are the default parameters. If you want to make any changes you can do that. Else if you want to make it more reliable you can increase its calculation period and see how it will work out. So let us add 10 day 10 10 calculation periods to each of these value and see how these changes the signal generated by this indicator. Okay, so here we have this lot more smoother looking indicator, but as you can see along with that we have quite a significant lag. The price move has been significant in today's session. So in those days where there will be sharp reversal from any rising levels, in those kind of scenarios, the indicator is going to have significant lag when we have higher calculation period defined for finding the output value of these indicator. And as you can notice from this side also, the SMI is going to be now much more reliable in terms of the signal generated, but those signals are going to have some lag. And here you can notice that when the price moves are in simply narrow range, we see these signal generated are going to fluctuate, but the underlying instruments price moves are very limited. So in those kind of scenarios, even when the signals get generated, we are not going to be able to make much amount of money. Rather than that, we might have to simply play the range and see on which side the momentum is. Here in today's session, we saw this sharp move which has resulted almost 100 pips, more than 100 pips. I think to be precise, it is the move of around 160 pips, and that has change the trajectory of the SMI here. Earlier in the day, it was in bearish territory, and we have observed that this momentum, which has been bearish, was not showing much significant decline, but still the momentum was bearish, and if you had shorted it, it would have resulted in profit provided you were not stopped out when we saw these freak move of around 30-40 pips after the start of European trading session. But then this reversal, you wouldn't have been able to get advantage of this move because with this help of SMI with extended parameters with these higher calculation periods. But if you were using the default parameters, then in that case you would have of course profited. So I am now again restoring it back to its prior calculation periods. Here we have now this fast K, fast, slow D, slow K, smoothing period, all as per the default parameters. And let me now shed some more light on the concept. So as you can notice, we have these price moves in the extreme range. These are closer to and even below the prior lows, and in this case here on the higher side, the recent price moves have now gone on to cross above this prior high. So that is also being reflected in this output of the indicator. Here we had this SMI making a lower low compared to the prior lows, but in scenarios where we have divergence of sort taking place, I think those are the kind of signals you can rely on much more. So if we go back in time to this 19th October here, you can notice that this price action was lower compared to the prior price action, but slightly. And if we look at this crossover, then the output values of the SMI and the signal line is higher compared to the prior SMI and the signal line output. So this kind of divergence suggests that now the price is stabilizing after due consolidation on the lower side, and some reversal might indeed happen. So this is the kind of divergence you can figure out using this SMI indicator. Similar trajectory can also be utilized for the short sale opportunities here. In last trading session of 20th October, we had this prior crossover, then again the price moved back and we had this second crossover in which we saw this SMI output crossover happening on the lower side, even though the price had moved on the higher side, and then this reversal happened. So this divergence formation is also one of the way you can utilize this indicator for figuring out the optimum opportunities to go for new trades, either on the buy side or on the sell side. The same concept of divergence seems to be applying here also. Here, when we had the Euro USD consolidating, the new highs were formed, but the SMI was making the crossover on the lower side compared to the prior highs. So the divergence was there, and then the significant reversal happened in a course of time. So that's one way to utilize this indicator. And coming to its cons, when we have the price action concentrated in a narrow range, in those kind of scenarios, it is likely to generate multiple false signals. So here, if we if we take out the divergence concept, then you can notice that we had these multiple crossovers which first ended in losses, and only after these 2-3 attempts we finally saw some profit being brought in by this crossover formation. Same concept applies here, where we saw these prior two crossovers not resulting in any gains, and then this third one with divergence finally got us some money. So these are the cons of this system using the SMI indicator. So we do have to be mindful while using the SMI indicator and see what kind of formation is likely to work, and with that we can then try to optimize our entry and exit points for the trade. Now if we consider this move in today's session, if we were to utilize the lower time frame formation, then I think you can even try to profit from the intraday moves in a day. The moves are generally speaking in a very shallow, very narrow range, so you can try to look for the divergence kind of opportunities using this indicator in lower time frames like 5 minutes, 10 minutes, 15 minutes, and that is also likely to work. So here we had this case of SMI dipping, and also we have the divergence happening in this case, and then finally we saw this significant reversal on the higher side. Let us see how the chart is unfolding on these 5 minute time frame. Okay, now I will revert it back to hourly, and let us see what are editing options we can try out on this indicator. So here, as I tried to explain to you, when you will use a higher time frame for calculation of this indicator, when these input parameters are used of the higher time frame, then there is going to be smoothing, but there is going to be also a lag in terms of the signal generated and the price action. So those two things have to be kept in mind whenever we are trying to make a judgment of what is the best combination. So this trade-off is something which you have to solve for yourself, and then decide what kind of calculation period is likely to serve your purpose in a best possible manner. Coming to the output combination, color combination of the output, You can keep it as it is, or you can style it in your own colors. So here, if you feel like, you can go for two different or even four different color combinations for defining these trend up, trend down, and SMI and signal output. So here the styling combination can also be changed with opaqueness. All right. So here this now combination is looking a lot more colorful, as I have used four different colors to define this calculation of the indicator. Coming to the levels, we don't really have any level defined as per the default parameter, but if you feel like, generally speaking, 50 can be utilized as one of the marker for defining the strength of the momentum. So if you feel like, you can add that level, that combination. Okay, so here I have added 50. So whenever you will have a strong momentum, you can figure it out using this indicator. Okay, now I'll remove it. Coming to the advanced reducing option, if you want the output value of this indicator to remain constant throughout the current calculation period, then you have to opt in for this recalculate on new candle only, or else these output values will keep fluctuating throughout the current candle period depending on what is the status of applied price. If you want the calculation period to be highlighted, you just have to go for that option. So here you can notice that there is little bit of black shade on this calculation grid, so that's how it gets highlighted, and that makes it easier for you to keep in mind what is the calculation period for the indicator. Calculation can further be customized, and we get the choice to define the instrument or to simply use it from the chart. We can do the same thing for the candle period. We can use it from the chart, or we can define it in our own choice, even if the chart is of hourly time frame. If we define the indicator to be calculated using a different candle period, then the calculation of the indicator will be as per our predefined input and not as per the chart's common candle period. So that is one major difference when we are working with these indicators combination and relying on these use sorry hard coded 15-minute as the input parameter. The spread side, we get two choices, and there is not going to be much difference in terms of the direction, but slight variation in the absolute values of the indicator. If you want the indicator to be available on all the candle periods whenever you change the chart's time frame, then you have to opt in for this option. Else you have to see what are the time frames on which you want this indicator to appear, and once you opt in for those combinations, you can then get this indicator defined for only those candle periods, and it won't appear if you change it to some other value of this charts time frame. So for example, on 4 hourly, we won't have any plotting of the indicator, but if I revert it back to say 5 minutes or hourly, I am going to be able to see this SMI indicator plotted back on the chart. The base period generally doesn't make much of a difference for this indicator. So it is more or less not into play for this indicator. So guys, that's it from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out the newly released trading platform. The link has been included in the bio. So thank you all for joining in. I will be back on Monday with a new indicator, new setup, new explanations. So do come back. Thank you all. Goodbye.